Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good to have you back on again this week. Thanks for making time.
Good afternoon, Devin.
Well, let's start in the U.S., where data show producer prices rose in September compared to August, the first monthly increase in 4 months. If consumer inflation does not come down in data due out today, then it seems we can expect another big interest rate hike from the Federal Reserve. What do you see happening on the inflation front, Professor?
U.S. inflation has been global economy's biggest issue over the past year, as all countries' cost of living is running nearly its highest level in more than 40 years. It looks that U.S. inflation momentum is stronger than generally expected. The producer price index, a measure of prices that U.S. business get for the goods and services they produce, increased 0.4% for the month, compared with the market's expectation of 0.2% gain. On yearly basis, producer price index rose 8.5%, which was a slight deceleration from the 8.7% in August. Generally speaking, the producer price index goes ahead of consumer price index by 6 to 12 months. Excluding food, energy, and trade services, the index increased 0.4% for months and 5.6% from a year earlier, the latter matching the August increase. The Fed has responded by raising interest rate by 5 times this year for a total of 3% point, and is widely expected to implement a fourth consecutive 0.75% increase when it meets again in the 3 weeks in early November.
Well, as you say, producer prices lead consumer prices by 6 to 12 months. We've got a long way to go on the consumer front. Well, as investors tried to read the situation, U.S. stocks closed a little bit lower on Wednesday, the 6th session in a row for the S&P 500. Futures are up a bit, though, ahead of this data. What's the story in the global equity markets?
U.S. stocks slipped Wednesday in the wake of new inflation data of producer price index and the release of minutes of September meeting of FOMC, which is the key interest rate decision meeting at Fed. The S&P 500 edged down 0.3%, nearly 2-year low. The Dow Jones Industrial Average lost 0.1%, and the Nasdaq Composite dropped also 0.1% a day after the tech-heavy index entered its second bear market of 2022, marking a drop of more than 20% from its recent high on August 15th. Investors have been on edge this week ahead of the release of Thursday's report on consumer price that will shed light on how much work the Fed has left to do in containing decades-high price rises. Along with U.S. Continuing inflation pressure signal, all major Asian markets dropped today in Tokyo, Shanghai, and Hong Kong.
Well, now, Korean stocks today closed significantly lower, with foreigners and institutions net sellers. The big names were a real mix, though. By sector, airlines, utilities, and entertainment took a hit. Tell us about the domestic market.
In yesterday's market, foreign investors led overall market rise, and foreign investors continued to build domestic equity today. But massive sales by domestic institutional investors like insurance companies and security companies led the markets to the downside. Also, no signs yet from U.S. inflation stabilization, and therefore stronger expectation on Korean and U.S. central banks' interest rate hikes have led investors to sell more stocks today. The benchmark Kospi dropped 1.8%, and Kosdaq even further retreated 3% today. In Kospi market, institutional investors' net sales of 300 billion won adjusted market to downside seriously. Most of the top 20 large-cap stocks retreated today. Samsung Electronics dropped 1.1%, and the second largest cap, LG Energy Solution, also lost 1.2% today. But SK Hynix, Kia Motors, Celltrion, and POSCO advanced today.
Well, finally, Professor, Korea is running into some trouble with exports, which are the main driver of its economy. So far this month, we can see exports down 20% from a year ago. So this extraordinary trade deficit in the tens of billions of dollars is likely to keep growing. Do you see that as the case, and what can be done about the situation?
Trade deficit, or the gap between imports and exports, continues over 6 straight months, and it is a gloomy signal for Korean economy. Korea's export slipped over 20% on year in the first 10 days of October. Korea's outbound shipments stood at about $12 billion in the period, compared with about $15 billion a year earlier, whereas imports went down 11% on year to about $16 billion in the same period. So the gap between export and import has made a trade deficit of $3.8 billion in early October. The decline of export partially came as a number of working days during the period came to 5 days out of 10 days. By sector, outbound shipments of chips, the main export item, fell 21% on year in the first 10 days of the October. By nation, exports to China, the largest trading partner, came to $2.9 billion, down 23% from a year earlier. Shipments to the United States, which is the second largest trading partner to Korean economy, also decreased 21% to $1.6 billion.
Well, we'll keep our eyes peeled for any sign of a turnaround on that front. Professor, we'll have to leave it there for today, though. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you very much, Devin.